Earnings conference call of RailTel Corporation of India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from Antique Stock Broking. Thank you, and over to you, sir.
Thanks, Steve. Good morning, everyone, and welcome to the post-result earnings call with the management of RailTel Corporation. From the management team, we have with us Mr. V. Rama Manohar Rao ji, Director Finance, Mr. Manoj Tandon ji, Director Projects, Operation and Maintenance, Mr. Harish Pavaria ji, ED Corporate Communication, and Mr. Harish Batra ji, who is Special ED Finance. So as usual, we'll have a brief on the gone by quarter from sir, and then we'll have a line open for everyone to ask questions. Sir, over to you.
Hello to all of you, and a very warm good morning to all of you. At the outset, I wish you all a very happy 76th Republic Day. And it gives me great pleasure to interact with you all on the RailTel's performance in the backdrop of Q3 financial results for financial year 25, which were declared by the company on 27th January 25. The highlights are as follows. The company achieved operating revenue of 768 crores in Q3 of financial year 25, as against 668 crores in Q3 of financial year 24, registering a year-on-year growth of 15%. The telecom segment contributed rupees 338 crores and project segment contributed 430 crores in company's operating turnover. As regards the total revenue, the year-on-year growth is 16%, with 782 crores in Q3 of financial year 25, as compared to rupees 675 crores in Q3 of financial year 24. The profit before tax in Q3 of FY25 is 90 crores, as against rupees 84 crores in Q3 of previous year, with year-on-year growth of 6%. The profit after tax in Q3 of financial year 25 is 65 crores, as against rupees 62 crores in Q3 of financial year 24, registering a year-on-year growth of 5%. The company achieved a total income of 2,222 crores in 9 months of this financial year, against rupees 1,770 crores during the corresponding previous year, with growth of 26%. Profit after tax during 9 months of financial year 25 is 186 crores, as against 169 crores in the corresponding previous year period, with growth of 10%. Earnings per share for 9 months ending on 31st December 24 stands at rupees 5 rupee 81 paisa, against rupees 5 rupee 26 paisa during corresponding period of previous financial year. Now, as regards some of the highlights to mention, I am pleased to inform that RailTel has received excellent rating from DPE for the financial year 23-24. RailTel is providing video surveillance at 8 major Mahakumbh stations with video analytics and face recognition systems. And our order book is strong with a value of about rupees 5,280 crores, with opportunities looking up in railway signaling, smart city solutions, HMIS, data center, and other areas. And importantly, RailTel has inked a 5-year strategic partnership with Microsoft to drive AI transformation in the public sector, to advance digital, cloud, and AI transformation in Indian railways and public sector space. As part of this partnership, Microsoft will support RailTel in establishing an AI Center of Excellence, making RailTel an AI-first organization and a leading system integrator partner. The partnership includes an organization-wide skilling initiative to train RailTel employees in next-generation digital, cloud, and AI technologies through Microsoft's AI National Skill Initiative and Enterprise Skilling Initiative. The two companies will co-develop AI solutions with Microsoft providing technical guidance on product roadmaps and RailTel bringing public sector experience on board. As we are in our 25th year of our journey in the service of the nation, our progress has been steady and impressive with consistent growth in operational revenue and profits. And we rededicate ourselves in the mission of making the digital India stronger. We remain committed to pursuing growth and creating value for our esteemed investors. We are also exploring new opportunities in order to realize our true potential. I thank you all for your trust and collective vision that drives the future of this company. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Otswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. My question on the order inflow trend in the 9 month versus last year of 9 months. So what is the absolute order inflow this year? Can you give us the figure, and how do you see the growth in order inflow in the coming quarter and the next year, sir?
The order book has been consistent, and it is very consistent in last 9 months compared to previous 9 months. It is of the order of 1,960 crores. And previous financial year also it was around 1,900 crores. So total order book is around 5,280 crores. And last year, Q4, we had received very good orders, and we are also expecting the same trend in this financial year.
Okay.
And to be specific, in this Q3, we received orders of around 790 crores.
790 crores. And the 1,900 crore in 9 months, right, sir?
1,960 crores is 9 months, yes.
And very similar to last year, right, sir?
It's exactly almost similar to last year.
Okay. The second question,
maybe. Yeah.
Second question on the margin side. So our overall blended margin has declined from 20% to 16.3% on 9 month basis. So when I look at our segmental reporting, the reason of the dip is mainly because of the EPC margin has declined from 7 to 4%. If I'm not wrong, you have guided the EPC margin around 5 to 6% kind of thing. So any low quality of low margin order work has been done in this quarter. That's why the margin 4%. And what is your outlook in this line of business going ahead?
As this question is often raised, and the management also has been responding almost similar manner, I will respond now. It is a question of basket of projects in that particular quarter which is contributing to the revenue. And if some of them are good revenue, good margin projects, then it will be giving a better overall picture. But we try to maintain 5 to 6% overall guidance for the financial year, because we are hoping that some of the profitable projects which are coming up in next, that is Q4, will make good the entire percentage.
And the last question on the progress on this railway Kavach program, and it is a very big opportunity for us. So what is the progress on that? Can you update us how things are moving, and when we see the big orders coming from that side.
And we are happy to inform our community, investor community and stakeholder community that we started participating in Kavach tenders in this Q3. And many of the tenders, almost we have in around 400 to 450 crore worth tenders. And the results are awaited. Tenders are being evaluated by the Ministry of Railways and various zones and divisions. So I will not be in a position to comment upon the end result, but I can assure you that we are in the right track. We have participated in around 400 to 500 crore worth tenders in Kavach and Signal.
And what is the total value of the tender on the block by the Indian Railway? What is the total size?
That will not be one single tender. It is across various railway zones and divisions.
Okay.
As and when the tenders are coming up, depending upon our suitability and other parameters. So we will keep on participating in the tenders.
Okay, sir. Thank you.
Thank you.
The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good morning, sir. Thanks for taking my question and congratulations on the partnership with Microsoft. First question again followed.
I'm sorry to interrupt, Mr.
Yeah.
Sanjesh. Your voice is coming very low.
Is it good now?
Yeah. Thank you.
Okay, thank you. Good morning, sir. So first question on the coverage side. In last quarter call, you mentioned that you are looking for other partner because quadrant product is yet to be approved. Now that we have applied for 400 to 500 crores worth of tender, whom have we partnered with this time?
Yeah, good morning, Sanjesh. And we have partnered with Quadrant only, and those approvals were in the final stages at that point in time. That's why it was we were not in a position to commit publicly. But as the days progress, the approvals have come in time, and then we participated along with Quadrant.
And Quadrant, the POI and everything is approved, and that is exactly in line with the specification of railway.
Yes.
Okay. That's good. Second, on the LTE rollout, is there any progress on that side? Because I think Kavach and LTE will go hand in hand for the signaling, right?
And the LTE rollout, I think the various zones and divisions, they have to float the tenders. And recently we received, I think, one tender in South Central Railway for 523 route kilometers rollout. That is around 142 crores project.
Okay. And this involves...
Remaining, we need to wait for the rollout of tenders by railways.
And this tendering is what for? Putting out the network, equipment and tower, all right?
Exactly.
And this will be managed by RailTel or it is a BOT? You build and transfer to them?
It is a kind of EPC. And after that, management part will be taken care by railways.
Okay. Even tower will be transferred to them?
Yes.
Okay, got it. Second question on the telecom revenue. In last quarter also you reiterated that we expect to grow that by 10%. This quarter it appears to be muted. Any particular reason for that?
Always telecom growth has been a challenging task. We are actually aspiring to maintain 10%, and sometimes we may be ending at 8 to 10% kind of thing. And some of the, as far as the growth is concerned, we are better compared to previous financial year, but we are not reaching to the level of 10%. But that is subjected to the market conditions.
And this market condition is what? You are seeing more pricing pressure or spending from the customer is lower? Where is the pressure coming from?
In fact, pricing pressure is one, a very strong pricing pressure.
Okay.
Yeah.
Got it. Got it. And on the margin side, even railway margin, telecom margin sequentially has fallen from 24.6% to 20.6%, almost 400 basis point lower. Any cost that has gone up significantly, which is driving this dip?
Not exactly. And actually, this telecom projects, telecom stream, we are actually incorporating the data center revenue also.
Okay.
Data center, there has been a good amount of investment and then maintenance activities in recent past. So that could be one of the reasons.
Got it. Got it. Sir, can you provide us the breakup of the revenue between NLD, ILD, and IP1 for this quarter?
Yeah, please. One second.
The next question.
And now NLD, I'll be answering that question. Sanjay is online, I hope.
Yes, sir.
Sanjay, you asked for the breakup of NLD ISP. NLD is quarter 3, 150 crores, and ISP is 111 crores, and IP1 is 75 crores.
And this depreciation jump sequentially is also because of the data center, which we incorporated in this quarter?
No, depreciation is not on data center. It is on telecom infrastructure.
And what we did in that side, capex? Any particular capex we did in this quarter?
I didn't get you. Could you come again?
The reason why there is a sharp jump in the depreciation, if you see, there is a 8.4% quarter-on-quarter growth in the depreciation. What led to this increase in the depreciation number?
So during the year, 156 crore capex is there. That has the impact.
Yes, depreciation there also.
Yeah, the capex is during the year as well as during the last year has contributed to this.
I think the capex and capex, I mean, I will ask my special ED to answer this specific.
Yeah, good morning.
Good morning, sir.
During the year, we had incurred 156 crore capex.
Okay.
So the impact of the additional capex during this year as well as during the last quarter of the earlier financial year.
And this capex, and out of this capex, how much was data center, sir?
Data center is during this year 56 crore we have.
In 9 months, it is 56 crores.
56.
Quarter 3, 30 crores.
Got it. Got it. And this is for the larger data center, not that edge data center, which we are doing.
No, existing data centers we have at Gurgaon and Secunderabad for them.
For that. Got it. That's quite clear. And for the Q4, generally we have a very large execution on the project business. That will sustain, right?
Yeah, it will be sustained, yes. And we are hopeful of sustaining that, yes.
Understood, sir. Very clear. And thanks for answering all the question and best of luck for the coming quarters.
Thank you, Sanjay. Sanjay.
The next question is from the line of Rohan Vora from Envision Capital. Please go ahead.
Hello, am I audible?
Yeah, please.
Yes, sir, thank you for the opportunity. So, sir, just in continuation to the last questions on Kavach, while we've already applied for 450 crores as you mentioned, so what would be, our total addressable market in the entire Kavach program, and any ballpark numbers on that? And do you so what are the Kavach lined up for us pipeline for FY26? Thank you.
The Kavach rollout is in the hands of the Indian Railways. I mean, how they are spacing the capex next coming 2 to 3 years is their internal understanding. We will not be having any clue. But as per general understanding, it is around 7,000 to 8,000 crores of Kavach, rollout in the next coming 3 to 4 years kind of thing. And coming financially 26 in the sense, now I mentioned about 400 to 450 crores tenders we have participated, and they are under evaluation. Once they are evaluated, in case the letter of awards are received, they might be in the last quarter of this financial year. So this will go into the execution mode in financial 26. So it all depends upon the kind of winning what we are going to achieve in this, the tendering activity. We are hopeful, say around, in addition to this 400 to 450, we may be expecting to participate in another 500 crores in the next financial year also. So thereby our order book we are looking up around, order book participation into the tenders will be around 1,000 crores in the next coming 1 year horizon. So the execution mode will depend upon how much we are going to win in these tenders.
Got it, sir. And sir, while we have a partner on this, so what would be our share of the revenue if we win and if we start executing?
No, they are our partners, and RailTel is forefronting, and they are our OEM partners with us.
Okay, so we will be booking the entire revenue, and the components will be bought out.
Yes.
Would that be the right assumption?
Yes.
And what would be the percentage of bought out components?
That also depends on respective tendering part, because it all depends upon in a particular tender in how many stations they are rolling out, and what is the component of the equipment and what is the integration part in respective stations. So it all bundle. We can say around what is the percentage we can? What is the percentage? No. The equipment part, how much? Equipment part around. That means equipment will be around 50 to 60% kind of thing, and rollout part will be. So rollout part is our stake, basically RailTel's prerogative. So we are experts in that area.
Got it. So the 50 to 50% of rollout is where we have expertise.
Yeah. And remaining is equipment, which is OEM's equipment. Yeah.
Correct. And sir, just if I may, the last question, the margins be in line with our normal business in this?
Yeah, they are in the same range. Say around 8 to 10% kind of thing.
Okay, understood. Got it, sir. I'll get back in the queue. Thank you.
Thank you, Rohan.
Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Harshit Nagpal from Yes Securities. Please go ahead.
Yeah, good morning, sir. Just wanted to know the division for the order book between railways and non-railways.
And order book for railways is around, total order book is 5,280.
Right.
About that. And in that, 28% is from railways, around 484 crores. Now, 1,484 crores, 1,484.
Right. And what would be the division for the project work services between railways and non-railways for this quarter?
Project railway, how much? This thing, 1 second.
Right.
Railway contribution is around 393 crores. Around 18% on our turnover.
Right. And sir, we were talking about revenue projections of 3,300 crores for the year FY25. Are we still on track for that, or do we see that will be a little lower?
Could you repeat the question? It was not clear.
So the revenue projections for the FY25 were 3,300 crores. So are we on track for that, or do we think it's going to be lesser than that?
No, we are on track.
Right. And for the order book division for tender and non-tender, if you could please give that too.
Yeah, that is also, tender is around 72% and 28% on nomination.
The next question on the edge data centers, we were talking about 8 to 10% margin, and we'll roll out around 102 data centers in the next 1.5 to 2 years. Is there a particular number that we've rolled out, or are we still in progress with it on how many data centers?
Yeah, we have identified immediate execution implementation around 20 locations. And in all those 20 locations, various activities like site survey and the feasibility reports, etc., they are on cards now. Right now they are going on. And few of them are reaching a maturity of finality where we will be, along with the partner, we will be in a position to approach for certifications. So to roll out the data center, we need uptime certification, which gives Tier 3 certification kind of. We are going to apply for Tier 3 data center certifications. So they also will take some time to, assess and then finally give the certifications, which will make the data center ready to go into business mode. So these are all actually taking slightly, they're all at different locations, etc., and a lot of coordination is involved. So initial level, it is taking longer time than expected. So we are now actively working on around 20 sites.
Right. And sir, we are not capex heavy in this, right? We'll be running the data center and maintaining it, right? That's what we are going to do, and the other partner is going to set it up. Is that what it is?
Right. You are right.
And so the railwire ARPU for this quarter, if you could.
It is 490. 496. 496 to be specific.
Right. Also, sir, just a question on the margin. So the top line is the 8 to 10% of the edge data center that we're going to get, or that is the final margin for us on it?
See, last time also I think this question was asked. My CMD sir was mentioning that these are all contract-specific details which can't be divulged.
Right.
But it is in the range as per the market trends.
Okay, sir. Thank you, sir. Thanks a lot. All the best for the company.
Thank you. Thank you very much.
The next question is from the line of Shubham Khadi from 3A Financial Services. Please go ahead.
Hello, am I audible?
Yeah, audible, Mr. Shivankari. Shivankari, am I right?
Shivam. Yeah.
Shivam.
Good morning, sir.
Good morning.
Last con call you gave a guidance of 30% year on year. Are we still maintaining that?
Yes, we are still maintaining that. Normally, quarter 4 will be slightly heavier compared to remaining quarters. And as of now, we maintain 26% growth rate year on year. So reaching 30 is not a challenge as per our understanding.
And sir, I can see quarter on quarter your revenues have dropped. So is there any particular reason, or was it just a one-off quarter?
It is one of the quarter. There's no specific trend kind of thing or any big event kind of thing. See, when we are actually clocking consistently of the same range and then maintaining year on year 30%, quarter on quarter there can be here and there, fluctuations depending upon various factors.
Okay, sir. And sir, the total order book you mentioned is over 5,000 crores, 5280 to be exact. So when can we expect this to hit the top line? And how?
Last year also, the guidance what we had given for projects is around 1,800 to 2,000 crores for this financial year. So it would be of the same kind of burning of the order book. resulting in turnover. It will be of the same order.
So it usually takes around 1 year to do 2,000
Yes.
crores worth of
Yes.
order.
Yes.
Okay, sir. Okay, sir. Thank you. That's all from my
Yeah. Thank you. Thank you.
A reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1 at this time. The next question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, in terms of order inflow for a project segment has been pretty robust. I think it is actually a consistent number that we are seeing. So any particular sector that where we are getting this traction, or it is segregated across sectors? Any color will be helpful on that, sir.
I have already mentioned to you that we are morning, Vishal, and I already mentioned that we are getting good, show up in signaling area, railway signaling. We have been actively participating. And as on date, our order book from signaling is around 330 crores. And data center is one area which we are actually actively working on. And various other, for example, HMIS additional rollout within the railways is also another area. So all these areas are contributing. And new area, which was not so significant in earlier years, earlier 2 to 3 years kind of thing, is the signaling one which is looking up.
Okay, got it, sir. Sir, in terms of work-wise also, are we targeting anything outside India for a railway in a project site, sir?
We have been consistently making efforts to get some good orders on international business also. We are closely coordinating with Ministry of External Affairs. They have been kind and then supporting the public sectors, including RailTel. And as of now, no, order has been received, but we are within the striking range. But not in signaling as of now, but various other system integration works right now.
Okay. And will it be possible, sir, vis-a-vis domestic market, how the size differs when we do it in international market?
In international market, to be specific, you are talking about signaling part. No? Signaling is many of the railway, other PSUs are also active in that area. So that is one challenge. We need to coordinate with our own railway, other PSUs who are doing signaling activities in other countries. And as far as this, for example, system integration works, we are hopeful of getting good orders. I think we are well within the striking range. We will be breaking the news as early.
Okay, sure, sir. Just one last thing, more like a clarification, sir. So there is a component of nomination in our order book. So is it fair to say the incrementally orders in the last 2-3 years that we would have got, so they are more like competitive bidding? These are like previous, before that, these are like, we are just concluding or finishing those orders. That's why they are in the book. Is it fair to say?
Yes. Fairly you can say that. So, major nomination works are only, our contribution into the order book is around 28%. And these are all mainly the earlier works only. For example, video surveillance system on entire Indian Railway rollout. That kind of projects are still going on. So that is what you are also saying the same thing. Yes.
Okay. Sure, sir. Yeah, that's all from my side. I'll come back in the queue, sir.
Thank you, Vishal.
Participants who wish to ask a question may press star and 1. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, good morning, sir. I joined the call late, so I just want a clarification. You said that 26% top line growth, right? Year on year. That's what the guidance you give, right? So
Correct. That has been the achievement in the last 9 months.
So 30%, 26 to 30% would be the growth range which could be taken for the analysis, correct?
Yes. Correct.
And sir, the net margins would be in the range of what, 10%, or the margins will improve going forward?
The net margins always has been point of discussion as we are growing in projects which are very competitive, and many of the public sector undertakings are also participating in very tough competition. So we have been giving a guidance of say around 9 to 10%. So it will be somewhere around, but it will be slightly depending upon the basket of projects in that particular financial year. It could be around 8 to 10% growth.
Okay. And sir, any update on Kavach would be?
I have already mentioned, Viraj, and it's a good news that we started participating in tenders. And in Q3, it's signaling and Kavach together around 450 to 500 crores worth of tenders we have participated. And we are awaiting the final results from the railways. The tenders are getting evaluated.
So what will be our total addressable size in Kavach project would be?
This also I have responded, and what I mentioned was that it all depends upon how the railway is rolling out the Kavach project. And across various zones and divisions, they have their own plan of rolling out and outlay for the Kavach. So in next coming 3 to 4 years, we are expecting around 7,000 crores is the overall rollout from railways. But these figures are our understanding, and the actual thing will be known to internal railway system.
Okay. So our addressable market size would be 7,000 crores, right? As per our understanding.
Yes.
Okay, thank you, sir. I actually joined the call late. Sorry for that.
That's fine, Viraj. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, this will be the last reminder. Any participants who ask questions, please press star and 1. The next question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. One clarification. If one has to understand the total bid pipeline that we have, do you compile any number that is there? Like this is the big pipeline that is there for us. And one parallel question to this is like, when in the third quarter, we have won almost like 800 crores kind of order. So what is the total bid amount that we have placed orders for, and we got eventually 800 odd crores? Just wanted to understand like how the win ratios are.
Very interesting question, Vishal. Actually, it all depends, because internally we keep on mustering various tenders that are afloat across various ministries and railways, etc. And that will be a big pool. But it all depends upon finding out partners, finding out right OEMs, and our eligibility criteria, our bid capacity at that particular point in time. It's all so many parameters that go into that, which finally make us to final bid. So it is very difficult, and this number is always dynamic on daily basis, because so many new orders, new tenders keep floating, etc. So that is a pipeline as such. This much we can't say. But one thing I can mention is that it could be somewhere around 4:1. If I participate in 4 tenders, if I get 25% winning rate also, it is an extremely good marker. But that is not the case with many of the public sectors, because everyone is competing for the same pie, similar kind of projects. So somewhere around 15% striking rate is a very good, decent marker. We are striving for that. This much I can say.
Okay. Sure, sir. Sure. That's all from my side, sir. Thank you.
Right, Vishal, thank you. And once again, to the organizers, I just wanted to inform you. Kumar sir just reached the office. He was on travel. He rushed from airport to attend this call to wish you all. I will just hand over the call to Sanjay Kumar sir, our CMD.
So very good morning, everyone. I'm sorry I could not attend this call from beginning, but I'm sure that our Director of Finance must have satisfied all your queries. I wish you all a very happy New Year, since we are talking for the first time in this new calendar year. Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Yeah, sir, can you hear me?
Yes, Mr. Mithani, please.
So I just wanted to clarification on Kavach basically. Is it safe that Kavach will be bid by RailTel, or it will be through your JV with Quadrant, the contract? Can you just clarify on that?
We have a partnership with Quadrant.
Okay.
We have an understanding.
Okay, so sorry, sir, go ahead, please.
Yeah, they are our original equipment manufacturers. Partnership is there with us. So in the tenders, we keep participating along with Quadrant.
Okay, so in addition to the previous, one of the analysts asked a question. The addressable side for you as alone will be 7,000, or so it will be combined, both it is 7,000. So that's just a clarification I wanted.
No, this is the rollout by railways. We are expecting railway will roll out tenders, say around 7,000 crores in the next 2 to 3 years. That is our expectation.
Okay, thank you.
Thank you.
Thank you. As there are no further questions, with this, we would now conclude the call. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you so much.